Um, Once we get it cleaned up, you can come pick it up. I think I can work out a payment plan, $600 a month for 100 months, and then.
Hello, everyone, and welcome to another episode of Reacting to TikToks. So today we're going to be reviewing a few finance and coaching TikToks that could actually change the way you perceive not just money, but how you perceive goals and expectations of yourself. So let's dive right into some videos and see what the buzz is all about. So this very first video is from Wes Head Visor. So let's see what he has to say about money and good spending habits.
Here's why people can't save money. We were conditioned to spend. Now think about this. How many commercials have you seen of companies telling us, hey, make sure you save? Because how much money do they make when we're saving our money? Nothing. It does not benefit Western culture, our society, for us to save our money. For example, if I tell y'all to get a budget book, set a budget, like a link in the description below, everybody's gonna be like, nah, bro, I'm good. Let someone recommend a great restaurant. Oh, I gotta try that. You probably gonna spend $50 to $100 easy on a plate of food, one meal. But yet, if we talk about investing in yourself, as far as teaching yourself how to save, getting the tools you need, then people be like, nah, I'm good. See? Which means we've been conditioned. So how are we gonna break the conditioning? Let's consume good content.
So he's brought up quite a bit of great points here. So a lot of things that we are conditioned to see, even in every commercial we see in our everyday lives, is to spend. And the reason for that is because media companies spend millions, sometimes billions of dollars day by day to actually make you spend more of the money that's in your wallet on their products. They're not going to make it so you continue to grow your money, because as you grow your money, you may not be able to spend on their products and have them grow their wallet. So what do we do with that? In order for us to actually condition ourselves to actually spend less and save more, the best way to do this is to actually think about budgeting and understanding where is our money going. And the best way to do this, just like he mentioned, is to actually start to document, if you need that, to document every step of your spending habits. So essentially, if let's make believe $1,000 comes to you every week, see where that $1,000 is actually going. See where it's actually being taken towards. And as you start to realize your spending habits, you actually start to feel and understand that the money that you could have been saving is actually being spent on things that maybe you don't even need. So overall, it is a change in mentality and something that we're not conditioned to actually accept. So overall, I agree with him. And some of the great spending habits that I actually have in order to actually make sure that I don't overspend is that I keep a very close eye on my debit transactions, on my credit transactions, and also overall just understand where is my money going, why am I spending this, and is this really a necessary spend? So let's dive right into the next one and see what the next TikToker has to say. So our next TikToker is called elegant_jerk5. So let's see what he has to say about getting a loan or getting a car in this case.
515 credit score with $11K cash down.
So just to give you some context in terms of credit score and the capital this person has. In terms of credit score, 515 is a very poor score. It's a score that usually in most cases you'll be denied a loan, or if you are able to get a loan, it'll be at one of the highest APR you will ever see in your entire life. There are people out there who have this kind of credit score and their APRs will probably be roughly 25 to 35% of interest. So essentially you'll be paying 25 to 35% of interest every year just for having this kind of credit score. However, how do you get around this? The second piece was that he does have 11K of cash. The great thing about having cash on hand is that you don't need credit. So essentially with those $11,000 that he is able to actually get quite a few options. So he could probably get like a Toyota Camry with that. He could get a Honda Civic. He could get quite a plethora of cars. If you go to like the car gurus, for example, you could probably find a lot of cars within this price range without you having to actually take out a loan or get destroyed by, people who want to serve you credit at super crazy interest rates.
Good thing I was headed to the back, bro. I was already headed back there, so let's see what I got for you. So I just got in this special car for you. This is a 2015 Chrysler 200. Only has 213,000 miles, 3 previous owners. Once we get it cleaned up, you can come pick it up. I think I can work out a payment plan, $600 a month for 100 months, and then after that, you can trade it in for something else. Bye.
So just to touch on the points that he said effectively $600 a month for 100 months. So that's $60,000 for the lifetime of the car. So overall, we can see that this message, what he's trying to convey, is that if you do have a poor credit score, people will take advantage of you. They will present you with a deal because they know you're desperate to get into something, whether it's a car or a home or you just need a loan. The one thing about the economy and just how finances work, if you have a low credit score, you are a target for people like this that they will take advantage of you if you let them. And that's what this TikToker is trying to explain, is that you shouldn't let yourself get taken advantage of, especially because it will happen. People will take advantage of your desperation, and they'll just take hold of everything you have. So what can you do in this situation? So in this case, if you have the cash on hand, buy the car with cash, just like which is probably the easier way. The other thing is to also improve your credit score. So that's another thing. You can actually try to improve your credit score before you decide to go into a vehicle. And this will limit the amount of, your monthly payments, your APR, everything. Everything will go down once your credit score goes up. There is, however, a third option. If you do have someone who you trust or that trusts you with their credit, you can actually get someone to co-sign a car with you. And essentially they would take out the car in in both of your names, but you would be using their credit. So there you would be able to have the ability to have a lower payment and just make sure that you actually have the ability to pay it. So overall, your payments will go down, but remember, if someone lends you their credit, please make sure that you're actually, you're not hurting, their chances of destroying their credit as well. So overall, just make sure if you do decide to do it with the third option, just make sure you pay your dues and do what's right by the person. So let's move on to the next video.
Hello everyone, my name is Anthony and I'm the host of the Log Sanctuary. I hope you've been enjoying our content so far, and if you have, please feel free to like and subscribe. Also, we have our website up here, and we also have some socials down here. And as always, leave your comments down below.
So this next video is I am Andrew Russell. So let's see what he has to say about mortgages.
What it would take to qualify for a $700,000 house, right?
Yeah.
All right, and you want to see the minimum that you would have to show or make to qualify.
Yep.
All right, so just call me, the Willy Wonka of mortgage. I make dreams happen. Come with me and we'll be... All right, I won't quit my day job. All right, so if you bought a $700,000 house, how much do you have to put down? 20%?
Yeah, 20%.
So that would be a $560 mortgage. It's about $33.60 a month for principal and interest. Now this assumes a rate of 6%, 6.25% APR. Now how's your credit score though?
Spectacular.
Speak to me. What do we got?
Like a 780.
Fantastico. Do you have any debt? Please God say no.
No debt.
Awesome work. You're busy with the Oompa Loompas. All right, so if we added a little bit more, $1,000 and change more for taxes and insurance, you figure that's about it.
So just let's go over a few of the points that he's mentioned. So the first thing is he mentioned a 20% down payment for a home. So just to give everyone some context, 20% is the standard, way to actually put down for a mortgage, but that's not the only way for you to take out a mortgage. In some cases, if you take out a traditional mortgage where you're going to be actually living in the home, the mortgage lender actually allows you to put down less than 20%. Now, what's the penalty for doing this? If you actually decide to put down less than 20%, there's an additional fee monthly called mortgage insurance. And what mortgage insurance is basically the mortgage companies basically telling you, hey, if God forbid you default on the loan, we have insurance against the loan for the entire amount that, it's due to us. Now, don't be afraid. mortgage insurance is not as bad as it seems. Overall, mortgage insurance monthly would probably be at most $100 a month. And this is for a loan that's probably like 800 to 900 grand a month. So essentially, the lower your loan, the less the mortgage insurance. There have been cases where mortgage insurance is only $50 a month. So put some attention to that as well, where it's not a guarantee that you need 20%. You can actually put 10% down, you can put 15% down, and that will still get you into a house. Of course, your base loan will be higher, but overall not a bad thing. The next thing that he mentioned was, basically insurance and taxes. That was another thing he was talking about. Insurance and taxes, make sure you pay attention to this, because depending on what happens with insurance, you might actually pay more insurance than you're actually expected to pay. Some factors that contribute to higher insurance premiums is, one, what does your home have a flat roof, or is it more like a triangular shape? If the roof is more triangular in nature, your mortgage insurance will go down. However, it's a flat roof. Usually these have a less useful life, so they'll effectively depreciate faster, or get older and deteriorate much faster. So that will increase your premium. And there's actually a lot of insurance companies that won't insure this as well, the flat roofs. And then the second thing is, are you near any commercial structures? Even if you have just one commercial structure to your right or to your left, this may actually double your insurance premium. So this is another thing to consider when you're actually thinking about buying a home and going and getting yourself into a mortgage.
Let's say a $4,500 mortgage payment. Now, if we did a conventional mortgage with a 780 score, no debt, if this is your mortgage payment, we could take that, times it by 2, so $9,000 a month. That's what you'd have to show. Take that, times it by 12, it's $108,000. So there you go. That's a simple and easy math. If you wanted a $700,000 house, 20% down, a 560 mortgage, the mortgage payment's $4,500 a month. You'd have to show $9,000 a month of income, assuming a 780 score, which is great, and no debt. Well done, Burkesol. All right, so you wanted to see.
So something else that he actually talked about in the video. Why did he say, did the person have no debt? So the reason for that is because if you do have debt, this actually adds to amount of leverage you have. So essentially, if you have more debts to your name, that's actually going to make it more difficult for you to pay back the mortgage. So the more debt you have, whether it's a car loan, a personal loan, a credit card, any of these aspects that add to your debt pool will actually make it seem like you're riskier to the mortgage company. So this is the reason why he was asking specifically if you have no debts. Another thing he was mentioning was the credit score. What does the credit score have to do with the overall mortgage? If you have a high enough credit score, which is effectively 750 and above, you will be entitled to have the lowest interest in the market. And I know this sounds crazy, but 6% is actually probably one of the lowest you can actually get at this current moment. So overall, not a bad thing. One other thing that I did want to add of my own knowledge is that one other aspect that you should always consider is, do you have any other homes under your name? And this is an important thing to understand. If you have any other homes under your name while you're applying for a mortgage, even though you may have all of them paid off, these are also additional monthly payments that will be added into your mortgage calculation. So essentially, if you have two other properties, you're still paying like property taxes, you're probably paying insurance, you're paying other things that you will have to show to the mortgage company in order for them to see if you can't even afford to have, let's say, a second or third property or fourth property, depending on how many properties you have. So essentially, this is another thing you have to consider before you even get into a mortgage as well. So there's a lot of hidden things that you should look out for, especially when you decide to get into your first, second, third, or even fourth home, whatever you guys are on. So let's move on to the next video. So this next video is from Higher Up Wellness. Let's see what he has to say about mental fortitude.
I ever learned when it came to maintaining my physical fitness and health was that understanding that done truly is better than perfect. A lot of you struggle with this all-in or all-out mentality. If it ain't perfect, I ain't doing it at all. When if you really think about it, all that is a classic self-sabotage. Because in what reality is it better to do 100% of nothing than 20% of something? I just went into the gym and I did half my workout and half my run. It was supposed to be probably 2.5 hours of training. I did maybe an hour. Is that optimal or what I was supposed to do? No, but it solidifies the habit of not missing a workout for this entire training block, and it puts me just 1% closer to my goal. And that 1% effort compounds over the course of weeks, months, and years, and if you're doing this for the right reasons, decades. I don't care if all you have for the gym or your health is 10 minutes. Take a 10-minute walk. Do burpees for 10 minutes. Because you solidified the habit of showing up for yourself, even if it's just in a small way. And 10 minutes one time is insignificant, maybe, but 10 minutes 10,000 times? Now that would create extraordinary results, but that is what we fail to see as beginners in fitness. Stop playing the short game with this. If I can't do a perfect workout, there's no point in doing a workout, and start thinking, if I show up 10 minutes every day for 5 years, what is that gonna look like? It isn't easy, but it is simple. Don't overcomplicate it. Hands down the best.
So he brought up some really amazing points here. One thing that sometimes I struggle with is that sometimes if I don't think of doing something the right way, or at least my way perceived the right way, then I don't do it. So something he mentioned was actually going to the gym. So sometimes I feel like exhausted. I'm like, maybe I don't want to do the 2-3 hours that I usually do, which is sometimes like 5 to 10 workouts plus cardio, of course. And I just effectively just say, hey, I'm not going to do it at all. However, even if you can't do the full extent of the workout, which is what he mentioned, every little grain of success counts towards the overall goal of your mission. So he's completely right in that regard, where if you even do like 10% of what you were expecting to do, it's better than nothing. So one common phrase that people probably say is, you miss 100% of the shots you don't take. So even if you take 10 shots and you make 2 of them, that's already 20% more shots that you did get than if you didn't take a shot at all. So overall, it's an important thing to understand that mental fortitude, it's not about doing everything 100% all the time. Because if we as creatures had to do everything 100% all the time, you know how exhausting that would be to have to operate at 100% capacity at all times? It's physically impossible, and sometimes even mentally impossible. And setting these unrealistic expectations on yourself will only make things harder for yourself, and will only make things even more difficult for you to realize your true potential. Sometimes, even though you want to rush to the finish line, it's okay to take your time, go at your own pace, and realize that the finish line will be there for you as long as you decide to continue to pursue it. Now, if you decide to never continue to pursue it, you're never going to achieve your dream at all. So, just make sure if you have something that you're planning to go work towards, whether it's, investing my first $1,000, whether it's buying a house, buying my first car, all of these things, all of these goals that you have in mind, think about it in granular pieces and then achieve it through the means of actually achieving your smaller goals until you get to the final goal. That's going to be the most important aspect for everyone out there, and I hope everyone out there decides to continue to pursue their dreams and pursue their passions. So, that wraps up another segment of reacting to TikToks. I hope everyone out there has a blessed day, and adios.
Keep doing what you're doing. You're doing an amazing job, and I'm wishing everyone out there all the best. All right, until next time, adios.